Welcome to the Seatrade Maritime podcast. I'm your host Gary Howard, correspondent at Seatrade Maritime News, and today I'm speaking with Poul Hestbaek, CEO of Folk Maritime, a feeder and regional container line based in Saudi Arabia and serving the Middle East region. Poul and I discuss the ongoing impact of events of regional conflict on Folk Maritime and regional cargo flows, as well as checking in on the company's progress in its third year of operations. As ever, I start by asking Poul to introduce himself.
Yes, my name is Poul Hestbaek, and I'm the CEO of Folk Maritime, a Saudi-based company headquartered here in Riyadh and owned by the Public Investment Fund of Saudi Arabia.
And your operations are very much focused in the Middle East. How have Folk Maritime's vessels or your locations and employees been affected by attacks? And have any of your crew been injured or anything during this conflict?
No. So today we have 6 vessels that we operate directly ourselves. And we were fortunate that we got the vessels out of the Gulf. So actually we have had all our vessels outside of the Strait of Hormuz, so we could actually continue to operate them in the rest of the Middle East, India subcontinent region. So that has, of course, given us some opportunity to help supply security into the kingdom and adjacent countries. We have not had any incidents, touch wood. The crew has been safe. We would also not do anything that would be questioning about their safety. So that is our focus number one. But we have not been in those situations that we would have to evaluate whether yes or no. We have been able to navigate safely for both vessel crew and for the cargo. Also, our offices, Riyadh, we are in the part of Riyadh which is relatively safe. So we have been actually active here. We have had days, and in some cases for our Dammam office, weeks where we have been working from home just to be on the safe side. But we have not had any near miss or anything that has been of concern. So I think given the situation then and the circumstances, we have been quite fortunate. But we also believe that that's partly because we have been very well prepared.
I expect there's been some impact on your operations, though. What were operations like before the 28th of February and how have they changed since then?
So before the 28th of February, we had access to 2 services from India into the Gulf, all the way up to Iraq and Saudi. Those services were terminated when the Strait of Hormuz was closed. But as I mentioned before, we had our 2 vessels that we operate in that trade corridor. We had them outside. And what happened, we started to employ them from India, from Oman into the Red Sea to cater for predominantly local cargo from India that used to go via the Gulf into Dammam and further into the hinterland of Saudi. They now have to shift and come through Jeddah. And not just Jeddah into Saudi Arabia, but also from Jeddah into Bahrain, Qatar, Kuwait, where they, of course, were also landlocked. They are completely landlocked into it. So the focus has simply shifted from Gulf into the Red Sea, and all our vessels are today involved either India into the Red Sea or intra-Red Sea.
If you're enjoying the Seatrade Maritime podcast, make sure you never miss an episode by subscribing on the app of your choice.
What's the sort of greatest operational pressure that you've felt since the 28th of February and how are you managing that?
Well, I mean, the most difficult part was that there was no lack of visibility. I mean, we did not know what would be the reality tomorrow. There was a lot of cargo from, let's call it global cargo, that got stranded, initially stranded on vessels that where the shipping lines took a wait and see approach. Later on, when they all concluded that this is not going to go away quickly, then they rushed to discharge the cargo in whatever terminals that could take the cargo along the Indian Ocean rim, and then have the cargo wait there until the consignees decided to move it, either keep it until in the hope that the Gulf and Hormuz would open up again, or shift it and then take it in via Jeddah. And that took a little bit of time before there was a conclusion on that, and I can understand that because it's a longer distance, it's more expensive. to bring it into Jeddah, and from Jeddah into the middle of Saudi Arabia is also a longer distance than it was from Dammam. So there was a cost impact on that. But eventually that cargo started to flow, both the local cargo and also the transshipment cargo. And then the volume flow started to stabilize. So this, I think, was the first lack of visibility that was challenging to navigate. Secondly, what has happened was that because of the supply demand, the cost for bunker just went through the roof. In bunkering, we usually bunker in Jeddah, and at times the prices were triple to what was normal before the Strait of Hormuz closed down. So on the cost side, it has been dramatic what we have seen. Now, the latest element that comes to us now is congestions, because now a lot of this cargo that we are just a repeat of what happened last year. So when the Strait of Bab al-Mandab closed, then all the cargo moved to the Gulf, and it clogged up the port along the Gulf coastline. Now, what is happening in the Red Sea is exactly the same, and that is adding congestions. So now we have waiting time for berthing in several of the ports in the Red Sea area. And that, of course, is adding more cost and bringing less efficiency into the calculation. So those are the key elements. And on top of it, we, of course, always have the safety of the crew. And what we are seeing now is that the ugly head of the Somali pirates has somehow started to come back, not in the corridor we are in yet, but also last time they start to become a player, then it also started further down the Somali coastline in small boats, small ships was captured, and then they grew more ambitious. So we are a little bit concerned what this is going to develop into. But this is something that has developed over the last 3-4 weeks, and of course something to be aware about. And we follow that very closely because that can have significant impact on the crew.
Yeah, absolutely. Something that we've been following here on Seatrade Maritime News as well. It feels like there's no respite for shipping at the moment in that part of the world. What an awful time for Somali piracy to be coming back. Last time we spoke, you were focusing on your Gulf operations at Folk Maritime, and this was due to the Houthi situation affecting the Red Sea. What's the state of play in the Red Sea now? Is there still heightened risk around Yemen's coast? And how much cargo now is being redirected, we've already touched on this already, through those Red Sea ports now that the Gulf is quite firmly closed?
It depends. I mean, for us, for Folk Maritime, we operate Saudi flag vessels, and we have not had any situation. We follow a very, very tight regime of security, and we are using global providers of anything from visibilities and direct support, and that has not changed. But what we are seeing is that still most of the big mainliner shipping companies, they still do not want to send their big vessels through the Red Sea. So that means that most of the cargo that flows into the Red Sea today comes by second-tier global operators, or in some case, new entrants, predominantly Chinese origin, smaller shipping lines that brings the cargo direct in. And that's the situation right now in the Red Sea. I think all the big shipping lines there are in a wait-and-see positions because the situation can escalate very quickly. And now is perhaps not the time to try to test the waters. And therefore, we feel that the situation is stable at this new level playing field with new, smaller entrants that cater for the cargo. Some of the cargo goes all the way around from Asia, south of Africa, up through the Mediterranean, down via Suez. It's a very long transit, but there are cargo that moves in that direction as well. But the majority comes in via Bab al-Mandab on these second-tier global operators.
Since we first met and Folk Maritime was fired up, I think there's been a lot of market disruption in the Middle East. How much does the sort of current state of Folk Maritime differ from the plans that were in place before these disruptions came in?
Well, we had the ambitions to build up our fleet of own container vessels slightly faster than what we're seeing right now. Perhaps partly because of the different crises around the world. It has been a very tight supply and demand when it comes to both chartering and also acquisition of secondhand tonnage. And that has somehow, number one, it has pushed up the price, and it also pushed down the visibility or the viability of vessels in the market. So that equation has, pushed us a little bit back in our acquisition strategy. But otherwise, we keep growing relatively stable. This year, we hope to grow plus 35%. So it is we are very strong still, but we have not been able to expand our network as we would have liked. That is probably going to be pushed into 2027. But then we have had a chance to optimize and become leaner and fitter. And that's actually one of the elements that we have been able to stay very agile in that situation that we're in the middle of right now, which is crucial in order to be able to operate, that you have a very agile organization. And that is then the positive side of it.
Yeah, I can imagine there's often needs to change things at the sort of whim of a tweet sometimes. You touched there on the Folk Maritime fleet and your initial plans for growth. What's the current size of the fleet and your fleet strategy as it stands?
So at the moment we operate 6 vessels ourselves, and then we have space on others, partners, and 5 of them are our own vessels. They're ranged in between 700 and 2100 TEU vessels. That serves the corridors that we're in at the moment. We feel that we have a strong cost position in those trades. Now, our ambition is to grow in tonnage, both number of vessels, but also size. So I would hope that the next acquisition that we will do, whenever that's going to happen, depend on the market, that then we are more up in the close to the 3,000 TEU vessels and eventually move beyond 3,000 TEUs as the network is growing. So that is the ambition, but because the availability of ships is close to none, then we just have to wait and see until the market is then slowing down a little bit, and then we are out there, both on the acquisition but also on the chartering side.
And we spoke before, I forget if it was on the podcast or if it was perhaps at Saudi Maritime Logistics Congress one year, and you mentioned there were sort of specific needs of feeder ships for the Middle East region and the potential of ordering new build tonnage in the future. I think at the time you said it was about maybe 3 years out. I wonder if that was still potential on the cards, or maybe that's been put on the back burner due to ongoing events.
We have completed a project of new building. So we have a plan in the drawers. But because today, again, together with the second-hand prices, the new build prices is very, very high. And if you make a decision today, you will get the vessel in 2029. And it's kind of like, that's not the path that we are ready to walk right now. So we are actually in a wait-and-see position right now. That may change, but as it looks like now, it's unlikely to change in 2026.
Sure, I think that makes a lot of sense. You also spoke, this was definitely at Saudi Maritime Logistics Congress, about slot costs and partnerships being a focus for Folk Maritime in its early days. Are you happy with the progress that you've made in those areas?
Yeah, I think we have. I mean, again, and I would like to underline that again, is that container shipping in general, regional container shipping specifically, it's all about cost. If you don't have it's a very marginal business. And if you don't have the right cost profile, if you're not in the top 3 on your cost in any corridor, then it's unlikely that you're going to make any meaningful profit. So whenever we do our activity, we're looking at vessel that can on its own provide the required cost profile, or to partner up with someone or a group of peers that can help bring that cost advantage that we need in order to be able to operate. So yes, we know that once we're going to keep on expanding, we want to bring in partners so that we can operate bigger ships and thereby reduce our unit cost. That has not changed, and that will not change. That is the bread and butter of shipping. And it is the required path forward when we come to regional shipping.
The latest vision realization program from the PIF is for 26 to 2030. And among the sort of 6 domestic ecosystems that are focused on in there is industrials and logistics and supply chain. How do you anticipate that this will impact Folk Maritime's ongoing performance, this ongoing support from your main investor, your owner?
So the adjustment in the vision, 2030 vision, which was, you're correct, was updated now 26 to 2030. There was no, it was basically just underlined the focus and the objective when it comes to logistics, actually to logistic and industrial. So, but if you look on the logistics side, so all the initiatives, all the focus to bring a hub strategy around the Port of Dammam and Jeddah, and make them into a distribution center for the, in the case of Jeddah, for the entire Red Sea. That one has not changed, and that is being pushed forward on many levels. One of them, Folk Maritime. And yes, presently we have all the connections that we have been asked to develop in the Red Sea. Now, when we have a normal situation, does that network we have the capacity that is required? No, probably not. We will have to keep investing in that, and we are prepared to do that. But overall, the strategy has not changed, and Folk Maritime have to fill the role as a regional facilitator of this trade within those corridors, Red Sea and Upper Gulf. So we are actually happy that the outcome of the update was a commitment to the initial strategy to keep pushing and investing in this hub structure around those 2 ports.
Yeah, I'm sure recent events have shown the value of adaptability and redundancy when it comes to supply chains. I guess it would have been easy to stop investing in Jeddah when there was trouble in the Red Sea, but quickly again, Jeddah has become quite important in dealing with a new situation that perhaps nobody really saw coming.
Correct.
So moving from measuring how things are going at PIF and their strategy to kind of looking at your own, we spoke again in the early days about the sort of strategic pillars behind the founding of Folk Maritime. And now we're moving into, I guess, year 3 of operations. How you mark your own homework here? How do you assess your performance against those pillars that were set out right at the beginning?
So when PIF decide to make an investment, then they have a very clear strategy with a lot of KPIs that has to be delivered. So the Folk Maritime strategic journey was 6-7 years of operation with milestones every year. So that's how we are measuring ourselves. Of course, there are some ups and downs, but when we look at where we're going to be by the end of 2026, we are on target on that growth journey that we have. We just need to keep on accelerating. And the challenge is always in such a startup environment is that you need to keep the pace. As a matter of fact, you need to accelerate until you get to a scale where your organization has the size that the scale of the business can carry that overhead. And that's the journey we are on. And as long as we follow those and we meet those milestones, then we're actually quite happy. And our shareholders are also quite happy to deliver. So that we have been, despite the bumps, we have been able to deliver on them as we have moved through or into the 3rd year's operation. And that is despite the tight market we talked about before, that we would love to have had more tonnage. We would love to have had bought the 5 vessels we have today at a much lower price, but that's the market. But still, we pushed through and hit those milestones. So I'm quite happy with where we are, and also quite happy with the forecast, and that we will hit the coming milestones that is ahead of us.
What are the risks looking ahead? We have our container correspondent, Nick Savides, writes a lot about the global container markets, and it feels like things are sort of hanging on the balance of Red Sea transits, and there's a real risk of a full-scale return for the main lines and the big vessels to the Red Sea. could have a massive effect on vessel supply. How would a return to the Red Sea, how does that trickle down to the regional feeders like Folk? Is that as much of a risk as it might be to your mainline serving the Asia-Europe trades? Or does the impact get felt differently once you get down to the regions?
I mean, I believe it will be different. Of course, there's always an impact, but it will be different. And I think there are some things that is important to keep in mind is that what we are seeing now, whether it was the COVID pandemic or now the different crises we have, tariff war. We don't just have the Israel, US, Iran war. We also have had the last 15 months the tariff war. So all of this, I believe, or I see that there is a focus towards nearshoring, and particularly there is a focus to friendshoring. That you want to make sure that you source your goods from a friend that is not going to stab you in next year or the week from now. So that things I'm seeing that there are some moving back and coming closer, which will support the regional structure. And the regional structure, I believe, is important. And that's why I believe that globally, we will see in some of these regional corridors that local players, like the case of Folk, will take a strong position in the regional trades because the regional customers, they need different level of service. Which increasingly difficult to provide if you are one of the very big shipping lines who has built their structure around automation, around self-service from its big, large customers. Then it becomes, as they automate and go further in that journey, applying much more artificial intelligence and move in that direction, then it becomes increasingly difficult to serve the regional market because they are at a different stage of this journey. They will, of course, eventually come on that journey because it's going to take time. So my belief is that the combination of this and the combination of more nearshoring, friendshoring will actually cement a position and growth in the regional trades. Also, when it comes to the Middle East. So I believe that we will play an increasing role. We will continue to be both a feeder operator and a regional container line. But I would predict that our regional container line share will quickly become the main part of our business. And it may not completely take over the business, but it will continue to be a significant part of our business and the main part of our business, thanks to those big drivers that is happening, fueled by the global impact, but trickle down to regional adjustment. As an example, India is increasingly a source of supply of many things that a couple of years ago came out of China or, in the meantime, Southeast Asia, that can now be produced in India. And there's a lot of trade agreement being made around the world with India as one of the partners. So just one example on this coming closer within the region. And I believe that this is going to happen here, and Folk will play a significant role in that in order to help this supply security.
Great, and I'll be keeping an eye on those regional developments as time goes on. Poul, thanks very much for your time today and for appearing on the Seatrade Maritime podcast again.
Thank you.
Thank you for listening to the Seatrade Maritime podcast. We look forward to you joining us on our next episode.